Hi, my name is Jason Watson with WCG, and I'm with
Joseph Bassett.
Megan Oeltjenbruns.
This is segment 3. We have 4 segments. This one's probably going to run long. We're going to talk about some payroll stuff and all that, so hopefully everyone's got a fresh cup of coffee or a beer.
Yeah.
We were going to have beers during this, but well, it's before 4 o'clock. And in our first segment, we kind of touched on the overview of the CRNA industry and why so many people are being converted or asked to be converted from W-2 to 1099 and all the huge benefits. Then we talked about setting up an entity, S-Corp election, the savings, maybe when to defer your S-Corp election to the next year because it doesn't make sense this year. And we kind of talked about all that stuff. One thing we didn't really talk about, we made an assumption about our audience, but the S-Corp election usually doesn't start to make sense until about $40,000 worth of net business income. So that's something that we forgot to mention back in our last segment. But in this segment, we're going to talk about state issues. This gets challenging because our country is founded on principles of like every state do your own thing, and we have this like flimsy document called the Constitution, and we have some amendments to it. But other than that, just do your own thing, make your own laws, do your stuff. And so we have some conflict between states. We have states handling it in different ways. You go from one state to the next state, and it can be a completely different landscape in terms of what they require and all those things. So anyway, let's talk about that. There's 3 probably big things we need to look at is registration of your entity, income taxes, and payroll processing. And just because you have one doesn't mean you're going to have the other. You might have all 3. That's easy. Usually your resident state, if you don't leave your state. But let's talk about registration. Where do you typically register? Let's say you're a CRNA, you're firing up your PLLC or your LLC or whatever you need in that state. What are the rules on registration? Where do you typically put that entity?
Typically, you're going to register in your resident state. Now, that gets a little complicated with the traveling CRNAs.
Because what's my resident state?
Exactly, yeah. So you have to pick a home base. And I think for one of the CRNAs we picked a home base, I think Wyoming. Mm-hmm. So we ended up doing so we could pick one space.
Well, that particular individual, I think, they were leaving New Jersey and they were off on a life adventure. Okay. You know what I mean? And they didn't have a home. They said, I don't have any ties to New Jersey at all. And I'm going to Wisconsin, I think, is where this one that we're thinking of. And I'm going to be there for 9 months. And then I'm like, well, then what? They're like, I don't know. I'm like, okay, well, you don't have a resident state that we can stick an entity in. Let's go ahead and pick Wyoming. And I think that was one of those examples. But anyway, back to what you were saying, resident state.
Right, so you pick resident state or Wyoming, you plant your roots somewhere. And now when you're traveling, depending on the state, you're probably gonna have to register as a foreign entity. When people hear that, they kind of freak out because they think foreign taxes, foreign corporations, all this stuff. But all that is just telling the Secretary of State where you're doing business, that you're doing business there.
Right.
And you sometimes have to pay them the pleasure of doing business in our state tax, which depending on the state, Colorado, $50 or $10 annually. Other states are a little pricier. Massachusetts, $500
California, $800 plus
California.
the LLC.
Just touched Arkansas, and they're at $275. I thought, really?
Yeah.
But,
No, it's awesome. So, yeah, every Secretary of State, and the Secretary of State is clearly different than the Department of Revenue. And people, in our line of work, we're very particular about what every government agency is doing. To maybe some of the common people who don't do accounting every day, they look at it as just being the government, right? But the Secretary of State will define what doing business as, or doing business in our state means. And for a lot of CRNAs, we can avoid having to file as a foreign registration because they don't meet any of those things. But then there are certain states, I can't think of too many right now, but there are certain states that they have a very loose definition of doing business, and you're like, some are basic, like if you're performing personal services in our state, you're doing business in our state.
You've worked an hour in the state this year, you should be registered, you should have payroll, you should have all these things.
And the payroll people are different than the Secretary of State people. So we want to register that in typically your hometown. Now, there are situations that we've run into, and it's very unique. I shouldn't say unique, it's everyone's different, where you do register that in a state that's not your resident state. Let's say you always go to New Hampshire in the summer to do this one contract, and then you always go back to Florida, let's say for the winter, and you're spending most of your time in New Hampshire, but you're not doing any CRNA work in Florida, well, then I guess we're gonna do New Hampshire, if you will, for your registration. So anyway, registration, income taxes, payroll, all different, kind of linked, kind of not linked, because you have one, maybe not the other. So talk about income taxes.
So
can I avoid taxes, Megan, if I incorporate in Wyoming and do work in Colorado?
No, Jason, you cannot. So that's and that
not
is
being advice to my bartender.
yeah,
then.
Exactly. This is one place where we do see a lot of people confused. They think, well, but I'm registered in Delaware. I live in Delaware. All these things. Don't even look at the fact that I'm doing all my work in New York.
Right.
It doesn't work like that. Where you earn your money is where you're likely to pay income taxes.
Correct.
And it's again,
especially a personal service.
Exactly. So, and again, this is a place where state by state, some states are going to say you earned $1, you file a return. Some states are going to say you got to, Colorado, you got to be over the standard deduction to have a filing requirement, so you could make $10,000 in Colorado and not pay Colorado income taxes.
Right.
So it's very, very particular as you go around the country where you might develop that nexus.
Yep.
And it may change year to year.
Right, and state to state. What works in New York might not work in Vermont or
Absolutely.
whatever the case might be. So you might have an income tax obligation. Likely you'll have an income tax obligation, but you might not have to register with the Secretary of State. Okay, the one thing that sort of follows is payroll though. If you are if you're gonna have an income tax obligation, you're probably having a payroll processing obligation. Do you want to explain how payroll works a little bit with the CRNA world, with the traveling CRNA world?
The setup of it and all?
Well, just, how it all works and why in every state.
Yeah, I mean, it can get kind of complicated fast. We would love to not open payroll accounts in every state that you work in, but we'd also love to stay out of jail. So we're gonna try to avoid that.
We hate opening them up as much as clients do.
Right. It's just not a fun time. I mean, you have to open accounts in every state that you're going to be in for a reasonable period of time. If you're talking to us and you're like, I'm going to be working here one day and I'm finishing the contract right now, we can't get payroll accounts open there. You know, so if it's reasonable, you're going to be there for 3 months in Virginia, we're opening up payroll accounts. Yep. We're getting an unemployment account with Virginia. We're going to pay them.
People are blown away by that too. It's just me. Yeah. I'm self-employed. Well, now you're a corporation, or your tax is a corporation. Everyone's going to view you as a corporation.
When you have an employee, it's you.
Yeah, you have an employee, it's you. So unfortunately, you have unemployment insurance.
And you can draw on unemployment too.
Right. So COVID has certainly helped that.
And
in the past, some states have been reluctant to give away, anyway.
Right, and now states are starving for unemployment dollars too.
Yeah, that's
so
true.
Now it's like, do we have to open? Yes, we do. So I know it seems silly. You're going to work here, earn $13,000. You're going to pay $200 to this state. We're going to close down Virginia, open up a payroll accounts, and hopefully not California, but maybe California.
California's easy.
You're going to pay them at maybe SDI. You're going to pay them a whole bunch of other taxes. So just where you're working, that's where you're going to be taxed. And the states want not only their income tax, but their unemployment monies too.
Yeah, that's the big thing. So I'm in Florida. I'm a CRNA. I bounce between Florida and New Hampshire, let's say. New Hampshire, Maine, lovely in the summertime, terrible in the winter. Florida, the exact opposite. So what's challenging is when you tell people we have to open up accounts in both states. They're like, well, Florida doesn't have an income tax. I get that, but they have unemployment, and it's administered by the state. Even though the Fed kind of helps out in a roundabout way, it's administered by the state. New Hampshire, same thing, no income tax, as far as I remember, right? And you still have to open up accounts there too. And in that situation, let's say that's all you do is bounce back and forth for the next couple of years, well then fine, we're not closing any accounts down. We're filing in Florida, and then we're doing zeros in Florida, and we're filing in New Hampshire, and then we're kind of flipping that back and forth. But it's when somebody bounces around. Hey, I'm in Florida for 3 months. I'm in Georgia for 3 months. I'm back to Florida. Now I'm not going to Georgia for I don't know when. I'm going to North Carolina. Well, okay, we should probably close down Georgia then if you're not going to go back. We've got to open up North Carolina. And opening and shutdown, I tell people, if you feel that our taxing agencies, whether it's the state or the IRS, is crazy about income taxes, they're fanatical about payroll taxes. There is something about payroll taxes and their budget and all those things they get really, really crazy on. So shutting these accounts down can get a little tricky. It's not just a switch you can turn off and on.
There are some states that will try to follow you around for a long time. Is it New York that's terrible about this, where it's like, I know I had a client, self-employed traveling vet, who worked in New York for one 6-month stint 5 years ago, and she's still getting mail from them because they're like, where's our money? She's like, I live in Florida.
And I think that's why they get so riled up about payroll taxes, is because the interest and penalties they charge on payroll taxes, man, those things accumulate quick. You look at it and you put it down for a day and you look at it again, you're like, whoa, it just increased again.
Well, and some of those things aren't even related to, typically the IRS penalty and interest is related to how much tax you owe them. So if you have a refund, there's no penalty and interest. Payroll is like, it's $500 late fee. But I owed you $3. They're like, now you owe us $503. You're like, what just happened? I stepped foot in your state for 90 days, put a bunch of people to sleep, and now you want $500. I forgot to pay you $3. So it gets a little messy on the side of payroll, but it's really important. I think this is probably one of those things that people say, hey, I don't want to open up accounts in New Hampshire. I don't want to open up accounts in Georgia, whatever. And it's like, I'm not the one saying you have to. I'm just a messenger. And you pull up the website, and some states are like, what, day one? Some states have like a 14 or a 30 day. Like if you're
30-day ones, I think, are being relatively reasonable there. That makes sense to me. It's like, if you're going to work here a month or more, you got to contribute. You got to participate in the system. But some of them it's day one, and like it or not, this is what it is.
You have some reprieve with states that reciprocate. Pennsylvania, New Jersey, New York is a great example. The tri-state area, you can live in New Jersey, go to New York, you can open up payroll accounts, I think, in New Jersey at that point, or in New York, and New Jersey gives you credit and all that stuff. California, Arizona have some of that stuff, the Midwest, Wisconsin, Illinois, Iowa, Minnesota. Even cities that saddle to states, St. Louis, Kansas City, you can have some sort of reciprocal agreements. You're not actually having to open up accounts in 2 states in those situations. But it's the one who, buys an RV. Was that who had the RV recently?
Somebody just bought an RV and a very nice truck to tow it with. Because they were going to go and drive that thing around via CRNA all over the country.
Yeah, that's awesome, by the way.
I know, sounds fun.
I had the wrong career choice. But anyway.
You do taxes all over the country.
Yeah, that's true. That's a good point. Yeah,
very exciting.
From the comfort of my Colorado home. No, that's what's really cool. But if you're starting to travel everywhere and not sure where your contracts are going to go and all that, then there's going to be a payroll problem. And it's not yours. I mean, if you're going to use WCG to help you out with all this stuff, no big deal. We'll take care of it. We have to charge you for it and all that stuff. But I mean, your chores are our elected profession. Again, we made bad choices. We should be traveling CRNAs, but anyway, let's talk about that temporary duty assignment and what that opens up for you from a lodging and travel and meals perspective. Do you want to talk about temporary duty assignment rules and all that?
Sure. And this gets into kind of the weeds with some of this idea of a tax home, right? Which is very much a technical term, and people think, well, a tax home, it's where I live. Well, maybe not, and what is it? It's if you're 50 miles away from your residence, you're outside of your tax home, and that might become your new tax home. And so if I'm here in Colorado Springs and I go take a temporary assignment in Phoenix, I am outside of my tax home, and likely I've created a new tax home for myself where now I maybe don't have as much opportunity to take deduction for travel and mileage and all these things because my tax home is now where I earn my money, where I live for taxes, so my deductions become a little bit constricted because of that.
But the cool thing is, if that is under a year, if you say, hey, I'm living in Colorado and I'm going to go do CRNA work in Phoenix for 90 days or whatever it is, hopefully not June, July, and August, That's not. That is a temporary duty assignment, and now all bets are off. Your tax home does not move to where you're earning income. Generally, wherever you're earning income is your tax home, unless it is a temporary duty assignment. The cool thing about temporary duty assignments, travel, lodging, meals are all going to be deductions.
And
now,
that's that huge opportunity we're seeing for the CRNAs, because I don't know that I've seen one with an assignment or contract longer than 6 months.
Correct. Absolutely.
They're all temporary duty.
And here's another rub. We got a bunch of things we can talk about, but even if you back to back your temporary duty assignments, and they, let's say, are 18 months, at each one though, you only had a 6-month contract. Now we probably have to talk about the client and see where they're coming from and all that, but you could argue that those are all temporary duty assignments because in isolation they are. In aggregate, maybe they exceeded the 1 year and are not temporary, but those are some wiggle rooms that we can play with. With temporary duty assignments, we got meals, we got lodging, we got travel. Now, I know of a lot of hospitals that pay for the CRNA to travel, and they give them a stipend for meals and all that stuff. Now, every hospital is different. Some hospitals will actually put that on your 1099 as value received. Like even though they're saying, hey, we're paying for your airfare, they might say, hey, we're going to put that on your 1099 and you need to deduct the cost of that or whatever the case might be, depending on who's paying for it directly, if the CRNA is or the hospital. But we have to be very, very careful because some hospitals will pay for that stuff. We can't double dip, right? But at the same time, if the hospitals are saying, hey, that was a benefit that we paid for on your behalf and now you're being taxed on it, then you have to keep track of that deduction, if you will. But yeah, those are the big things with TDYs. Now, the problem with TDYs is it has to be definite, right? It can't be indefinite. So if you're going into a contract that might expand over a year, might be less than a year, then that's not a temporary duty assignment. So I guess my encouragement to everybody is nail down the darn length of the contract.
And less than 12 months.
Yeah, exactly.
1,800 hours or less.
Yeah, exactly. Yep. Yeah. So temporary duty assignments are great. You run into a problem where you string along a bunch of temporary duty assignments, and the IRS will just say, "Hey, you don't have a other tax home." It's that situation where they can't really define a tax home, then your tax home follows you. So you have to be very careful about how that can play out as well. But no, temporary duty assignments are great. Taking contracts outside of your resident state, out of your current tax home are great because now you got more deductions available to you. And usually it's a lifestyle choice, right? I'm in a crummy area in the wintertime. Let's get the hell out of here and go somewhere else where it's nice and warm. So do you want to talk any more about registration, income taxes, or payroll processing? I think we kind of hit a lot of the big stuff there.
Yeah, maybe one thing. We talked about how in some states you might not have to register, but you might still have to process payroll. Some of those states you might have to register too, so you can get, like Nevada has my Nevada business ID number, things like that. So just kind of keep that in mind when we're looking at opening payroll accounts in states where we're not registered as a foreign entity. That's
a good point. Sometimes you have to register for the sheer fact that payroll won't even talk to you. In this case, Nevada payroll won't even talk to you unless you're registered in Nevada. So they just kind of do an end around. And Nevada's expensive, arguably, to be an LLC.
What's their annual fee, like $700?
I thought it was $310, but maybe that's somebody else I'm thinking of. It's too high. You can tell why they don't have an income tax because they're charging the heck out of businesses. So anyway, that's all we have today, or not today, on this particular segment on state issues with CRNAs. My name is Jason Watson with WCG, and I'm going to front sell, if you will. The next segment is going to be tax deductions. Kind of, I think, the favorite topic everybody's. We field a lot of tax deduction questions, right? The best one is how can I save more on taxes, right? So anyway, we'll be talking about that next. Thanks.